Think shift. Limitless ideas, future thinking.
Traditional financial systems are rapidly migrating into decentralized, blockchain-based networks. By early 2026, Europe's largest asset manager, Amundi, launched a $100 million tokenized fund, while the New York Stock Exchange began actively tokenizing traditional assets. Amidst this institutional rush, one of the year's highest-earning participants in digital assets emerged from the political sphere, Donald Trump. His historical business legacy relies on tangible assets, skyscrapers, golf courses, and licensing deals. Now, a significant portion of his portfolio is grounded in lines of code and liquidity pools. The records from 2026 show political brand equity shifting into automated, revenue-generating digital assets on a scale that had not been attempted previously. The transition from vocal crypto skeptic to active industry participant took shape over several months. He began engaging directly with the culture, hosting high-profile meme coin gatherings for foreign guests and developers at Mar-a-Lago. These events culminated in the launch of World Liberty Financial, a new platform serving as the primary vehicle for his entry into the digital asset space. The platform's stated goal is straightforward: to act as a bridge connecting the regulated structures of traditional finance with the open protocols of decentralized finance. World Liberty Financial is designed to move political influence into a model based on fee-generating protocols and corporate agreements. Decentralized finance executes trades automatically through blockchain smart contracts, bypassing banks. These systems are managed by a governance token, WLFI, which captures network value. To tether this to real-world operations, developers established DT Marks DeFi LLC, where Trump-affiliated entities own a 38% equity interest. This architecture establishes a link between two disparate systems. It enables a regulated, traditional holding company to capture the revenue generated by a decentralized smart contract. This captured revenue is divided into three distinct pillars, starting with the token sale proceeds. A waterfall chart shows the service agreement terms. DT Marks DeFi LLC receives 75% of the net proceeds from the initial WLFI token sales, after accounting for agreed reserves and expenses. These initial sales generate immediate liquid capital. It is hard cash deposited into the LLC, unburdened by future market swings. The second pillar of this financial structure relies on retained assets rather than realized cash. DT Marks DeFi LLC, alongside family members, holds a massive reserve of 22.5 billion WLFI tokens. This chart compares the assets. The bar graph shows stable cash from sales proceeds, while the line graph represents extreme market volatility for the 22.5 billion tokens. Because the token is illiquid, this is paper wealth that could drop to zero before being sold. The third revenue pillar provides a buffer against that volatility, the USD1 stablecoin ecosystem. This layout shows how USD1 operates as a digital token backed by real-world assets maintained by BitGo Trust. The 38% beneficial ownership entitles Trump's affiliates to a percentage of the interest earned on the actual reserve assets backing every USD1 token. The total valuation is driven by the volume of assets under management. With 22.5 billion tokens in reserve and rights to 75% of initial sales proceeds, current market estimates place the total 2026 earnings range between tens of millions and several $100 million. The true financial yield here relies on architecting a multi-tiered platform that actively captures transaction fees and interest, rather than simply holding a volatile cryptocurrency and hoping the price goes up. Supporters view World Liberty Financial as a necessary evolution. They argue the platform brings mainstream visibility to decentralized finance, allowing individuals to bypass traditional banking gatekeepers entirely. Critics focus on transparency risks. They highlight the regulatory concerns of a major political figure operating within a decentralized exchange network, where participants and their capital can remain anonymous. This ongoing debate exposes the ethical and legal gray areas that emerge when massive political influence intersects with borderless digital finance. The rapid tokenization of a massive personal brand establishes a distinctly new, unprecedented mechanism for monetizing global influence. Regardless of where the crypto market fluctuates next, this 2026 financial architecture serves as a proven blueprint for converting public attention directly into decentralized wealth.
Thank you for watching video. For more interesting videos, hit the subscribe button and hit the bell icon.